Hello traders and welcome to another video review. Today is Thursday, December 18th, 2025. Let's take a look what do we have on the economic calendar for today. Asian session were mostly uneven. Expect the speech from the US President Donald Trump. What do we have here? Not much about the situation in the markets. Interest rate decision in Taiwan, interest rate decision in Sweden, interest rate decision in Norway. In Norway, scheduled for release at 10 o'clock. Monetary policy meeting minutes statement from Turkey scheduled for release at noon. Data from the UK are very, very important because we have the Bank of England interest rate decision, and the market participants expect a cut from 4% to 3.75%. USD data from Mexico scheduled for release at 1 o'clock. Meeting minutes from Bank of England scheduled for release at 1 o'clock, together with the Bank of England inflation letter. Speech of the Bank of England Governor Bailey at 1:30. Just 45 minutes later, we got interest rate decision from the European Central Bank. The market participants expect the European Central Bank to hold the interest rate decision at level of 2.15%. Together with the interest rate decision, there will be deposit facility rate, data release, marginal lending facility rate data release, and monetary policy statement. At 2:30, we got CPI data, CPI and core CPI data release from the US, together with the Philadelphia Fed manufacturing index, together with the initial jobless claims. And 15 minutes later, we got the ECB press conference, Q3. Interest rate decision in Mexico today at 8 o'clock. Westpac consumer sentiment from New Zealand at scheduled for release at 9 o'clock. Tick net long-term transactions scheduled for release at 10 o'clock. Fed's balance sheet scheduled for release at 10:30, and the New Zealand trade balance scheduled for release at 10:45. So very, very busy European and US, London and US session. Two interest rate decisions, initial jobless claims. At least this is what can happen today in markets. So please stay focused, stay vigilant. We might go up and down today. So to see what is going on and what might happen in the nearest hours, let's take a look at the charts. We start with euro dollar. So the euro-dollar 4-hour time frame chart, let me just skip to the 4-hour time frame chart. This is 30 minutes. There you go. 4-hour time frame chart is still showing us a potential for a downside slide. We went from 1.1805 down towards the technical support at 1.1704. We bounced a little bit towards 1.1759, and now the market is positioning itself ahead of the interest rate decision by the European Central Bank interest rate decision. So, if the yesterday low located at 1.1704 is violated, the test of the trend line might happen. However, please notice that this is very, very important data release today, and the market might not behave technically, right? It might behave more emotionally, or basically the market flows will dominate the situation. So what else do we have? I pointed out this yesterday. We obviously have the bearish divergence. The bearish divergence is on a 4-hour time frame chart between the RSI and the price. Actually, we went down from extremely overbought conditions towards the level of 50 straight on, even broke a little bit below the level of 50. Now the market is testing the level of 50 again after the short bounce in momentum. So please keep an eye on the trend line, on the 100 periods moving average, and especially on this technical support 1.1684. Euro dollar preparing for the interest rate decision. The same situation is on cable. Cable is preparing for the interest rate decision. I wonder whether this internal trend line will be any help. For now, no, it won't be any help for now. We got a spike down in momentum towards the level of 40, then we spike back up towards the level of 50. Now a period of the consolidation of a little bit low volatility ahead of the interest rate decision by the Bank of England. So right now, the major levels are yesterday's low 1.3310, technical support 1.3289, 1.3275, and obviously yesterday's high at 1.3455. Otherwise, the British pound looks quite bearish, as this movement here has been basically completed. Please keep an eye on the 100 period moving average 1.3310 and the technical supports. Right now it's really hard to say how the market will react on the data, because we don't know whether the Bank of England and the European Central Bank will deliver. Maybe they will cut more, maybe they won't cut. So now it's a waiting game and a repositioning. US dollar versus the Japanese yen 4-hour time frame chart is showing us nice bounce from the demand zone, with the momentum back in into the positive territory right now. 60 points strong momentum to the upside, breaking the 100 periods moving average at the 155 and 68. The next target for the bulls is the swing high from December 12, 156.14, and then eventually this level here, which is the technical resistance at 156.59. So US dollar versus the Japanese yen market. This market is moving inside of this channel. Possibly this is the channel. We don't know if it is. We just assume that this is the channel. So we are moving inside of it. And as long as we stay inside of this channel, the outlook remains bearish and corrective, because this looks like a corrective channel whatsoever. Nevertheless, two big important data events today: Bank of England interest rate decision, European Central Bank interest rate decision, Norwegian Central Bank interest rate decision, Swedish Central Bank interest rate decision, Mexican Central Bank interest rate decisions. Plenty of the interest rate decisions. How they affect the US dollar versus the Japanese yen, maybe not much, but nevertheless we need to be prepared for this situation as well. Gold doesn't do much, as it is still close between the major levels of technical support 4,264 and the local technical resistance 4,353. Momentum is positive, however it's not that strong. 56 points, narrowing towards 55 and 50 level. 50 is of course the neutral level, and the market is, as you can see, oscillating up and down inside of the range. So no big deal here on the gold market. Crude oil. Well, the crude oil is a different story. It looks like the market wants to go lower towards the lows of the April 2025. So the lowest level since April has been hit on the crude oil. 55.12 is now the technical support. We got another very important line here. The low from the October 2025 will act as the technical support as well. So we are on a daily time frame chart way below the 100 periods moving average, because it is 61.26. We might have something like a bullish engulfing pattern on a daily time frame chart. Look at this: a first green candle, 1 2 3 4 days, break 1 2, right? So first green candle in a few days. That might be just the reaction for the support. Nevertheless, we broke at 54.98 yesterday, so we managed to grab the liquidity below this trend line. Now the question is whether this bullish engulfing pattern is confirmed by the bulls, right? If there's next daily candle is green, if it is, then we might have some sort of the pause in a downside movement, especially that on a 4-hour time frame chart we hit the extremely oversold market conditions, and we managed to bounce as high as 50 points on the RSI. Nevertheless, that corresponds to this level here, which is obviously the technical resistance, and that means we have basically made the bounce towards the first logical technical level, 57. This is 57 and 02, 57 or 13. And now the market start below this level. We are waiting for the continuation. And last but not least, the Bitcoin big candle here. This is the candle that I've been telling you guys about, that this kind of candle can happen these days on a Bitcoin, on the cryptocurrency markets, especially if you are getting towards the end of the 2025. This is typical candle when the market first went up towards 100 periods moving average and then closed way below, and even managed to almost test the swing high from the December 15, 85,149. Currently we are back moving higher, right? Nevertheless, this situation here with the with this bearish flag or ascending corrective channel looks to me like a test of the lower channel line, which was quite successful. However, the bulls couldn't hold above 90,000, which is very important information, with the momentum falling lower towards the level of 38 points again. So right now bears are still in charge of this market on a daily time frame chart, and bulls are unable to move from the extremely oversold conditions back up to the extremely overbought, because they can't cross the level of 50, which means that somewhere there the level of 94,595 is the level that needs to be violated for the bulls, by the bulls, to enter this positive territory, right? And then eventually test the 99,000 technical resistance. In terms of the Elliott wave, this is all corrective. It doesn't actually look like bullish movement to me, especially because of this wick to the upside that overlaps that lows. So that's obvious. This is corrective in nature. So there is no impulse down just yet, because this one doesn't look like wave 1, wave 2. That's too short for wave 3, wave 4 overlapping wave. It doesn't make sense too much for me. It's more like end of the year, moving up, moving down. We don't know what we're gonna do. Let's restructure the portfolio, new narrations for the 2026, and so on and so on. So right now, stay focused, stay vigilant. This kind of candles with high volatility, long upper wicks, long lower wicks might happen much more often than in any time period of the year. So the December, it is like it is. We need to live with it to the beginning of the new year, 2026. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.